All right, now for commodities market up there, we see Brent futures drop $4.20 to $102.70 a barrel in early trade after falling about 5% the previous day. U.S. West Texas Intermediate crude fell below the $100 mark for the first time since March 1st, dropping $4.30 to $98.71 a barrel, which followed a 5.8% tumble in the previous day. All right, now we have Dumebi, aka analyst at Financial Derivatives Company. Great to have you, Dumebi.
Thank you so much. Good morning.
So it's trending downward now. Is it just geopolitical tensions easing at this point, or is there something else?
Well, there are actually a couple of factors contributing to the decline in oil price, the current decline in oil price, of which, like you rightly said, number one is the fact that Russia and Ukraine, there are talks of possible talks, on
possible talks.
yes, of possible talks and
Right.
negotiations with both countries, and the markets are really considering, the implication of that, and because if this happens, it simply means that oil prices will continue to trend downwards, maybe not to $60 per barrel, but it will significantly decline, and this would help taper down global inflationary pressures that have, resurfaced and surged over the past few weeks since the tensions escalated. But a couple of other things that have also contributed to the decline in oil prices that are number one, Russia did actually state that it would, maintain its contractual obligations to oil supply despite, everything that has been happening with the tension. So the markets are looking at, okay, this is happening with, the tensions, the war, and Russia is still going to maintain its stance on meeting with its contractual obligations in terms of oil supply and natural gas supply. So that as well is, causing somewhat of a decline in oil prices. Then another thing is the fact that the UAE, the Saudi Arabia, came out to, signal that it would encourage the cartel, that's OPEC and its allies, to increase oil supply this coming period. So if that happens as well, that could, definitely maintain the decline in oil prices. And then there's also the fact that U.S. is easing its sanctions on Venezuelan oil production, and if that happens, supply would increase. The U.S. is also, intensifying its efforts on the Iran nuclear deal. That as well could, prop up prices and prop up supply, and in turn decline prices. So those are the factors currently, triggering this downward trend in oil prices.
And I also see China is also playing a role there. With,
yes.
This surge in COVID-19
yes,
that's actually looking at demand from China.
Yes.
It's also affecting what's going on there.
Yes, that's also happening.
Yeah.
China is the largest oil exporter right now, oil importer rather. And if anything affects their demand, it will definitely hit the global economy and the oil markets as well. So from the demand side, that's also happening and, affecting the decline in oil prices.
Right. Well, it seems right now, the market is more like, sentiment traders are running the show at this point.
Exactly. Which is very expected. The oil markets are always whirled by sentiment. If a country says this, if there are positive sentiments towards it, we always see oil prices respond almost before any other commodity would respond. So oil markets, a lot of times, are like the first signal for when certain things are happening in the global economy. Even when it comes to a statement on interest rates or a statement on the US dollar or something happening with China or even Japan, we'll definitely see something, we'll definitely see the oil markets respond. And that's exactly what has been going on over the past few weeks. Even from December last year till today, we've seen sentiments really parade the market and, drive oil prices either upward or downward.
Right. And, well, with all of this that's going on, with geopolitical tensions and with demand issues, what's your outlook for the price of oil going forward?
For now, definitely the decline could continue, especially with the fact that right now the supply inducing factors considerably outweigh the demand factors, and this could keep prices, trending downward. But we don't see oil prices crashing to $60 per barrel or even 70 in the near term, and that's because there are certain risks associated with the tensions. If the negotiations don't go as planned, we could see, we could see a resurgence in oil prices, and that could increase if demand from China declines, because when there's a decline in demand, it softens prices. But if China is able to contain the resurgence in COVID cases, this is positive for oil prices. And just perhaps if OPEC doesn't agree to the supposed increase in oil supply, or probably just ramps up supply by maybe an additional 100,000 barrels, just putting it at 500,000 barrels per day, it would just have a mute impact on oil prices, and that could keep oil prices high.
And all of this is impacting, price of diesel. We've seen,
of course,
price of diesel skyrocket, and we also have, poor power supply at this point.
Yes.
And I'm wondering how business is managing.
Basically, it's a double whammy for both households and businesses. Right. When we look at the price of diesel, unlike the price of PMS, the market for diesel is deregulated, meaning that the forces of demand and supply considerably, would reflect in the price of the commodity. The commodity is completely cost reflective. So, and the trend is a direct trend. When global oil prices are high, we see diesel prices increase. When global prices are low, we should see a considerable decline in diesel prices. It might not be by the same magnitude, but we should see the trend follow suit. So, and that's exactly what's happening with diesel right now. And we're not only looking at the fact that global oil prices are high, but also looking at the impact of the exchange rate on the imports of diesel, because Nigeria is a net importer of almost all refined petroleum products. For the consumers or for the household, this coupled with the fact that for households that really don't run on diesel, most households use PMS, right. But the issue is that that's also scarce, and it's going for about like 200 naira per liter. In some filling stations in other parts of the country, you could even find it about 250, even 400 naira per liter. So basically, the cost of living is very high, and the other alternative is power supply, and we're seeing that in a very, very epileptic way. Right. It's not exactly encouraging. So you find that people on a normal day that will probably cook in bulk are not cooking in bulk. Everybody just, let's just eat what we can right now, rather than cook in bulk and, have everything go bad because power supply is not stable. This also is affecting productivity when we look at the fact that right now a lot of companies have encouraged work from home. So people that are supposedly supposed to be working from home, that can't have access to fuel, that can't have access to diesel, and also can't have access to power supply, their output levels are very, are falling, and this is, affecting productivity and labor productivity. Then when we look at... I
also saw that bakers are actually threatening to shut down.
Of course, because, so that's now, we're looking at this now in the business aspect. For businesses, they are not only hit by this increase in diesel prices because their operations are high, but they're also hit by the fact that other costs of input materials are also high. So if you look at bakers, for example, that, they run on diesel, and they also, get some of their products and those trucks that bring those products to them run on diesel. So their logistics costs are higher, their operating costs are higher, running costs are higher. Some of them have already, increased price, and because the commodities that they produce are somewhat price inelastic, so they can't really change prices, really quickly. And a lot of times, these products are also not. When we look at products like confectionaries, meat pie, chicken pie, sausages, cake, people don't demand for those things on a daily basis, unlike bread. So what we're seeing is they are diverting their attention from those ones to the production of bread, and even the production of bread, we're seeing that they're having to miniaturized. So what we're seeing is that they're reducing the quantity of the bread. So the bread it still looks okay, but it's not just as much as what it would have been, and that's because they have to cut costs.
Right.
Not only that, you also have the fact that they are also laying off staff. So that's also having an impact on the labor market and unemployment level. So it's just a loop that's just going to keep going on, because these companies, their cost of operations have increased, and they have to find a way to stay afloat. If not, we're looking at them possibly divesting to other African countries. And even though these other countries are affected by inflation, the business environment, or affected by the global tensions, the business environment is a lot easier for them to thrive than here in Nigeria.
And bread is a very important food. But
Exactly.
We're also seeing other commodities trend downward. That's wheat. We're seeing wheat prices also have a pullback. It looks like all these commodities are having some kind of pullback at this point.
Yes.
Yeah, so how are you seeing this wheat?
It's still the same thing. There's still the same impact, with oil, and that's because the Russia. There's, like I said, there are possible talks. Possible talks and negotiations, and as well, we're seeing that supply from the Black Sea region, which includes Russia and Ukraine, supply is coming up from that region as well. Russia and Ukraine together account for about 29% of global wheat supply. Ukraine alone supplies almost 50% of European food supplies. And we also look at wheat, corn, and some other commodities. So basically, that's one of the reasons why wheat prices are reducing. But the outlook, to be very honest, is that wheat prices could still remain very high. Wheat prices are about £1,000 plus, $1,000 plus for per metric ton, and this is the highest in almost 14 years. So even if prices are going to subside, it might still be around 800, 900 for the meantime, which, yes, and is still elevated for countries to import. Now, when we look at the impact of this for Nigeria, that spends about like $2 billion on wheat imports annually, obviously that's going to have a ripple effect on the price of flour and other staples that make use of wheat as an input material. I remember that people just don't use wheat flour alone. You also have the fact that they make use of sugar as well. They make use of eggs. They make use of milk, all of which the prices are already high. And the fact is that the country still imports a sizable number of these commodities. So even if the prices, coupled with the fact that the prices in the global market are high, we also look at the fact that the cost of importing these materials or these commodities are also high because of the fact that the exchange rate is still very volatile.
The year of the squeeze, everything, all prices rising.
Exactly.
Well, now, another commodity, the iron ore.
Yes.
We see that Greece junta shut down the biggest iron ore mine. How's that going to impact the market?
Definitely, it would have an impact for them. That's Guinea now. It would have an impact on their external reserves position, have an impact on their government revenue, because that's a huge export commodity for them. But when we also look at the attendant impact on Nigeria, this provides an opportunity for Nigeria to play, actively in that market. Obviously, with the issues concerning iron ore production or exploration rather in Nigeria, just like every other commodity, Nigeria might not be able to significantly tap into this market. But the truth is Nigeria has the position to actually benefit from it. There was a recent report that stated that Nigeria could actually make about $60 billion annually from this commodity. And we have, of all the countries in West Africa, Nigeria is part of the top, top 10 producing countries or countries with the highest iron ore deposits, about 3 million tons. 3 million tons plus. So we're looking at the fact that there's the possibility of this, providing or supporting Nigeria's export earnings. But the truth of the matter is that not until the lingering issues concerning investment in that sector, in regulations, exploration, until those issues are addressed, we can't significantly tap into the market.
So we have issues with the iron ore commodity.
Of course.
Is there one commodity that we actually are doing well with? Just one.
To be
Or
very
two,
honest,
possibly.
it's quite difficult to say, and that's because several commodities in the country are plagued with almost the same issues, ranging from storage facilities to regulatory issues to production issues. Some for agri-commodities, you have issues surrounding fertilizer. Some of them we have for example, in production of corn, for the production of corn, and we import this corn. So there are lots of issues, affecting this sector. So it's something that we definitely have to really look into. Not only agri-commodities, but all commodities in the country have the potential to, significantly boost export revenue, and not only boost export revenue, but considerably encourage the divestment plans of the country, or diversifying the country's revenue base. So not until these issues are addressed that we can actually, so really there's no commodity. But the truth is that there are opportunities for domestic investors to actually partake. But the only issue is that, like I had mentioned, there are certain level of regulatory issues, to some of these commodities, and a significant factor is insecurity, because quite a number of both metals, agri-commodities, and all they're situated in the northern belt of the country. So, and with insecurity plaguing those regions, it becomes very difficult to make investment decisions, and not only make those decisions, but also see them through.
Okay, well, what's happening with domestic commodities in Nigeria?
Right now in major markets, we're seeing that prices are actually declining, and a major factor to this is weak demand. So the demand for quite a number of these commodities are reduced, and that's because people don't have the money to buy as much. And this is possibly going to continue, and it, would definitely reflect in the inflation numbers that are probably going to come out today.
Today, yes.
Yes.
Well, you've given your outlook for that number. We'll watch to see how what comes out, for inflation for last month. All right, Dumebi, aka analyst, financial derivatives company. It's always great to have you on the program.
Thank you so much. Thank you.